Good morning, everyone. Dan here with tradingology.com and the trading room for March 11th. Almost missed that it was past 9:30, so we're a minute late, gentlemen and ladies. Good to see you on this fine Thursday. Dave, coming to us from Strong Market as always. Happy to see you, sir.
Good morning. ADA was up 900%.
Yeah, I just found that. Check this out. I think we have a few of our members that own it too. I'll be curious to see. Look at this bar yesterday. Go from the bottom of that wick up to the top.
17 to $1.40.
Let me maximize it. Yeah.
Holy
top
cow.
to bottom or bottom to top. 907%, including the wicks yesterday.
Jeez, I gotta check my wallets. I think I had some of that.
Anybody that's got ADA, you might want to cash some in just to cover your investment. Not financial advice, as everybody says. Just saying that's a nice gain if you're owning it.
Yeah, but you know what? Wait a minute. I'm on a daily here.
Oh, it's a monthly. Sorry.
Yeah, that's.
Oh, I fooled you.
One day.
I was going to say, what's going on? Sorry about that. False alarm.
Yeah, that's like,
false alarm. It's 900 up 900% in a month last month.
Yeah, that's a lot. That's still a lot.
Okay. All right.
Yeah, Hedera hash graph, I guess H bar is up like 10 or 15%. That's doing pretty well. It's up pretty strong today.
I haven't looked at that one in a while.
Last couple.
Oh, nice.
Yeah.
I did like that one early on too. Had some profits in that earlier this year.
Yeah, I got one buddy that keeps texting me all these different coins that are up like 1,000% or 300%. Why didn't you tell me yesterday?
Right.
Clue me in yesterday.
Tell me before GameStop's going to go manic again.
Oh my gosh. Have you looked at that? I mean, it dropped 40% like in about an hour yesterday.
Oh, but she's going back up again.
Yeah, going back up. Look at that.
Diamond hands, baby.
I don't know. Is there anything stronger than diamonds?
I don't think so, right?
Carbon fiber? No. Pretty close.
Yeah, I heard it actually this week too. As some people chatted, well, yeah, my AMC is doing good again. I'm like, they're still playing these same exact ones. See what AMC is doing. Yep, like same deal.
Keeps coming back. Yeah, unbelievable, huh? Buy the dip.
That's truly amazing. Well, today we're seeing everybody's buying stuff, so everything's going up.
Yeah, it looks like a melt up. Looks like a melt up in stocks.
Yep, VIX is going down. We broke our short-term trend line that we talked about. I put it back on a daily chart. We'll see if we get back below 20. That's where it kind of stopped its previous one in November.
Right.
Its downfall after the big drop. So we'll see if that happens. Interesting notice I saw this morning was everybody saw the House pass, the Senate pass, so it's over to Biden to sign. The last I saw was Friday. He's already talking about the next one before this one signed into law, I hear.
Really? Wow.
Did you see any of that?
No, I didn't. It just said that the bill is on Biden's desk ready for him to sign, but I didn't notice anything about a new bill. But
yeah, apparently there's already talk of the next one.
Yeah, I wouldn't be surprised. I think Biden is the spending president. He's going to try to spend as much as he can.
So we see that relate in our indexes. New all-time high yet again today. In the Dow, 32.5 we broke. Actually, right now we're just about there again. Yeah, we're literally at all-time highs right now.
Yep, that's a new high.
Tech has recovered this morning. NDX is back up in the positive, almost 2%. SPX is up almost 1%. So everybody's happy. No problems to be found anywhere in the markets because this signals a good economy when you have your unemployments. It's a green number, Dave, but it's still 712,000 new people filed unemployment last week.
That's up?
Only 712.
Only 712.
We expected 730, so we're happy.
Yes, that's right.
And I think they didn't change it, did they? That is the number we saw earlier this week. I think we talked
Yeah,
about that, right? We thought it was 730. I think that didn't change.
yeah, 712,000 people unemployed. That's in the last week. So yeah, no
And it
problem.
makes, they're claiming it again. US jobless claim hit lowest since November.
Yeah, yeah. Let's spin it positive. Absolutely.
Truly amazing. Oh, here we go. Biden's $4 trillion industrial policy faces a bigger hurdle than politics. 4
Ooh.
trillion.
Now, let's see. What was the first COVID? Was how much was that one last March?
Oh,
Uh,
I'm gonna have to look it up. I don't remember actually.
I think it was a trillion, 900 million or something, or a trillion. I don't think it was as big as the one we just passed. So you got, let's say it's a trillion, just around it. And we got 1.9 trillion, we're rounded up to 2. So we're at 3 trillion now. And if we get this one at 4 trillion, that's 7 trillion.
And I think you're missing one in there somewhere because there was 2 last year, right?
Well, there was the extension of the unemployment benefits, but I'm not sure if that was like an add-on to the original COVID bill.
Maybe that could be.
I think it was an add-on. Yeah. But yeah, no problems here, guys. Go about your business.
Isaac's saying exactly today was when the WHO declared it last year. So yeah, everyone's talking about the anniversaries. We had over here, we heard it was, the first case reported and coincided with the first day of 1 million people being vaccinated. So there's all kinds of these things being memorialized now. Hey, this happened now. And yeah, good call out there, Isaac, where, it's 1 year ago today, they finally admitted something was going on after how many people were already getting it. And here's another new one too I saw. How do you like this? They're going to call them Gen C because it's shaping their future.
Interesting. We got Gen Y, Gen X,
Yeah, they got Z,
Z,
and they're skipping A and B, and they're going straight to Gen C now.
millennials.
How would you like to be named that for your? Nothing like labeling you for life.
Yeah, I know. Hey, what generation are you? Oh, I'm the COVID generation.
Right. Oh. Yeah, seniors were molded by depression and the millennials by 9/11. Today, the children of Gen C will ever be shaped by C19.
Oh my gosh.
Gross. Yeah, there's your GameStop drop in 25 minutes. But then it jumps back up in 2 minutes. So
Yeah. Yeah. Well, the reason it started going back up again is because GameStop is now looking at online sales as an opportunity. Wow.
oh, instead of just brick and mortar,
Yeah.
they're
Yeah.
finally making that transition. Hello.
It's like every company that comes out and announces that they're looking at taking online seriously now goes up.
That's amazing.
Good morning, Andre.
I missed you at the door for a second there, Andre. Good morning. Good to see you.
Yeah, so we got all kinds of good stuff going on here. Just very, very happy markets. Melt up. I think it's the melt up. Maybe my prediction from last year of 40,000 Dow is not not too off the mark. I mean, we're close to that. Another 8,000 points. What's that? Nothing.
Yeah, that's nothing right now. And I saw it again. Sven's awesome tweet about 3,900 in the SPX. It just loves that number.
Yeah.
That is just staying there. If you trade just 3,900 as a magnet, long or short, I think it's going to hit it.
Yeah, but we are green across the board on the balance of power. We are green as green as green.
Yeah, one little little trap in here, but it didn't last very long. Had a little downward after it, but now everybody's full bore bullish hurting again.
Yeah, and the NASDAQ SD, this looks like we hit some big numbers too.
Yeah, we're spiking up here. We got some 40s end of the day yesterday. Definitely some more activity going on there.
Yeah, it was strong yesterday. I watched it for the last 15 minutes. It was up around 48, 49 almost the entire time.
Let me grab this guy. Oh, I have to pull up my yield one. What was that doing this morning? I'm assuming
it's up.
Down.
No, it's up actually. The yield is at 1.535. It's up 1% on the 10-year. and we're up almost 2% on the 30-year. So I don't know if they're not paying attention. Maybe they took a long breakfast this morning and they're not in their office yet, but
Interesting.
the 10 and the 30 are up.
That
And
surprises me.
it looks like a good trend, doesn't it? I mean, yeah, that's a daily. That's a pretty strong trend.
Yeah, the one thing I did notice too, just looking at this generally, was a lot of the big wicks outside of the 8th. We've had much smaller wicks on the top side than previously. I don't know if that means anything. It's just something I noticed looking at it.
Well, there's an index called the MOVE, which is similar to the VIX for stocks. It's the MOVE index, and that's the volatility for bonds, and that has been elevated.
That's only on like Bloomberg terminals, right? Or do we have access to that?
No, I tried to get it on TradingView, but it wouldn't come up. It's only on Bloomberg. So every once in a while, I'll see somebody's chart indicating the move. Somebody has Bloomberg terminal.
Yeah, I noticed Danielle DiMartino Booth talks about it a lot. That's one thing I don't have access to yet. So if you guys know anybody that has Bloomberg, let us know. We'd love to see the insights.
Yeah, I think it's not cheap. I think a single seat is like $10,000 a month.
Yeah, I was gonna say it's like the old days of paying $10,000 to get a trading seat.
Yeah, so that looks like a trend. I mean, it doesn't look like it's going to stop. If interest rates keep going higher, guess what's that going to do to the U.S. dollar? U.S. dollar is going to rocket because, I mean, hey, actually, if you go to my Twitter feed, I retweeted Reuters Business. There was a pretty interesting post that they did about the fact that the ECB started emergency bond purchases, which drove rates down really quick.
I've seen that recently. Let me grab yours here.
And remember what happens to the US dollar index, the DXY, 60% of it is by, that one right there. They sped up the emergency bond purchases and the yields dropped. So they're trying to, I don't know what the issue is there. I didn't really get into the article. The headline was really all I needed to know. And what happened was, as soon as that happened, the euro dropped and the DXY went up. And it's going to make the US dollar a lot more attractive if our interest rates, like the 10 and the 30-year, continue to rise. Yeah, that's a big deal.
Between that and, I don't know if I can pull it up quickly. Maybe I can find Sven's drop on. Yeah, let me go to his feed. Because M2 drastically changed and the way they calculate or define it. Did you see that?
No, I didn't see that.
Let me see. Let me move this guy over here and see if I can find the Fred account here.
I've been watching the velocity. Velocity of money is just dropping like a rock. Nobody's doing anything. There is no inflation in the velocity.
Here's another fun part I've seen too. Look, M2 money stock. Oh, we're going to discontinue this.
This series will no longer be updated.
Yeah, I think it's M1. Let's see what M1's discontinued too.
They got a suggestion there.
Look at this.
Yeah, that's just like ridiculous.
This is because they literally changed the definition of what M1 money is.
What did they change it to?
Oh, you put me on the spot.
Oh, okay, I'm sorry.
It's all good. I just happened. Well, it literally went from, we had 4 trillion. Now we have 18 trillion. Well, they didn't create that much that fast. I believe it has to do with savings accounts.
Okay.
In addition to, I think that's part of it. But yeah, there was literally like a gap of 20,000% in these graphs if you look at it. And I noticed Sven was talking about it. He might have it here. He tweets a lot, so yeah, there's part of it. Because this is your ECB dropping. There you go. 10-year
Yeah.
bond after the ECB announces.
Oh, that's the Italian bond against the euro. So yeah, that dropped like a rock.
And I know I'll get it here for you because it was just yesterday. That's funny.
That is funny. I saw that one too.
Yeah, see, here's his 3,900. I love this chart. Just keeps hitting 3,900. Sorry if I'm making anybody dizzy. This was a good one too. GME looks like a cardiogram.
Yeah.
So maybe that's what it's going to do.
Yeah, that is pretty funny.
All right, here it comes. It's close. There it is. They decided to change the definition of M1. Look at that gap.
Holy cow. What
That's
the?
M1 on, so I don't know how they chart these exactly. I don't know if it's part of Bloomberg or if I can just put that in maybe a trading view. I haven't tried personally, but that's ridiculous. So yeah, that is the same one here. So it is M1 money stock, but it's curious how they have a discontinued and a not discontinued. So this must be the old definition. No, it still shows it, but they're going to stop updating it. I might have to look in to see what's going on here. How they have a new and an old, what that means. That's really odd though. As if it wasn't rising enough fast enough. They just stopped reporting on it.
Yeah, I don't get that one at all.
But it all relates back to exactly what you were talking about. Dixie. We'll see how long that can stay down as related to the UEP. And I know you and I were talking about this offline. Looks like we filled this gap. I was kind of waiting for that to get filled, and we'll see if it now takes back off.
Yep, gap is filled.
Gap is filled to the body now too, so now it's really ready. Same deals with gold and silver. They're pushing on. I've seen a lot of people are talking about gold again. It's on sale right now. It's one way to look at it. Uh-oh, Dave. Oh, I thought you froze for a second there.
No, I was just not
you were really still.
So we've got a melt up in stocks. I think gold buyers are coming in. They're starting to prop up a little bit. But, the big story for me really is the amount of spending that's going on. And so, boy, I don't know where this market's going. I really don't. Maybe my initial reaction of 40,000 on Dow was going to be,
low.
Yeah, I don't know. But
interest rates. Talk about your tsunami.
Oh yeah, the tsunami. Yeah, that's a good one. Yeah, look at all the stuff that's coming, guys. Really good things to look forward to here at the end of March. So yeah, I just read this for you so you just don't strain. Or if you're not watching it and you're listening to it, this is what it says. This is from Zero Hedge Premium. The setup for late March, a lot of selling. We're going from the best inflow picture like forever, what seems to be heavy equity selling in the second half of March. Pensions are rebalancing. So a lot of people are doing 60-40, balances, 60% stocks, 40% bonds. That could go to a completely different number because stocks have gone up so high and bonds really haven't moved that much. In fact, they're moving down a little bit. So people might be moving out of stocks into bonds. Systematic deleveraging. In other words, some key technical levels that Goldman Sachs has put up saying, hey, look, we're looking for probably over the next, and it's more of a kind of a rotation in stocks. But Goldman Sachs is looking for 180 billion stock sales at the end of the month. Momentum, 12-month momentum changes at the end of the quarter. Remember how bad it was at the end of February? We had a pretty good, selling at the end of February, and they're saying it's even worse now for the end of this month, especially because it's the end of the quarter. And then they got issuances. There's so many IPOs and SPACs that are incredible. They're just coming out like crazy. This is the hottest start on record for a new year, 139 billion that have been raised. The previous year to date record was in 2000 with 70 billion. And we all know what happened in 2000. Wow. So at the end of this month, look, I mean, boy, we've raised 139 billion with all these SPACs and IPOs. We had had a lot of IPOs lately, a lot of them. And yesterday, it was Roblox. You know Roblox? Yeah. Interesting. And then taxes, of course, we have April 15 tax payments. So there's a lot of unrealized or realized capital gains in 2020. A lot of people sold stocks, they made money. And so there's a potential there for a lot of tax selling. So between the end of March and April 15th, we could see a pretty dramatic decline in the market. And of course, we're up 300 points right now.
And then on top of that, you're mentioning, put that all this is happening.
Oh, yes, that's right.
The liquidity has been drying up, and we're at the lowest volumes in 6 months on the ES.
Yeah, so liquidity in the S&P 500 futures is the lowest in 6 months, and the weekly average is the lowest it's been in like years, according to the CME.
So that's really interesting. So that feels, my first thought on this was, this feels like the big ones all over again, where we hear everybody's talking about it. This is the most retail trader talk ever. Like everyone and their brothers talking about it now, because everyone's being able to get into the markets. They're easily accessible. They're getting, the government's throwing money at households everywhere, so they're putting it somewhere. And now they're going to be stuck holding the bag, is what it feels like to me at the top. Because if the volatility is going down, or not, excuse me, not the volatility, but just the volume's going down, that means institutions are less active.
That's right.
All the activity is retail traders.
That's right.
And if there's suddenly no more buyers to support that, when retail can only go so far.
Yes.
This thing is going to drop like a rock.
Yep, that is absolutely 100% correct. Institutions are in there, and the futures on the S&P 500, they're the big players. And I think they're talking about the full S&P 500 futures contracts. Right. And those are the big boys, real big traders. Not the MES and not the ES. That's the full contracts. So if it's only retail driving this market higher, the liquidity is just getting sucked right out of the market.
And then, as you've mentioned before, obviously we know the Fed is the only buyer in the treasury markets. So how long can that go on? Just like they've said, you want to see temporary government program can be the most permanent thing ever, as the very well-versed Milton Friedman put long ago. That still holds true. It feels like that's what's turning into these monthly stimulus checks. They're going to turn into, everyone's talking about UBI, universal basic income. Is, can they get rid of stimulus now?
Well, correct me if I'm wrong, because I haven't looked into it, but I did hear that only 250 million of the 1.9 trillion that they just passed is for the $1,400 per person. That
could be. I don't know the exact number, but it's
not a lot.
Right.
So they could easily say, hey, look, we're just going to give everybody $1,400 a month from now on. That's only $250 million a month.
It's nothing.
That's nothing. Come on.
Yeah. Can they stop it? They haven't stopped any other government program ever. So how will they stop this temporary one?
They won't be able to do that. Oh my God. No. Once they start, they're not going to be able to stop.
Yeah. And so now we're over a year of monthly checks, yearly checks. They're not going to be able to get away from it now.
Yeah. Yeah. I don't think they will be able to get rid of it. We don't want to be doom and gloomers here completely. I mean, for people who need it, they need that money. They really do need that money. But what the long-term implications are is probably, if we do get the deflationary environment that we think is going to be the final deflationary push, and all asset prices are going to go down, then we're going to get hyperinflation, because that amount of money being pumped into the economy, released through UBI, will drive up asset prices. Because as soon as we get that deflationary drop off, people are going to realize, hey, things are cheap. I can buy things cheap, and they're going to go out spending like crazy. And when the pandemic and the vaccines are out and everybody can start moving around again freely, and travel and all that kind of stuff, the velocity is going to go up, and with it is inflation. That's what I'm going to be looking for. I'm looking for M2 velocity. I'm looking for everybody reopening, and we get UBI at the same time. And we get all three of those things, and that's inflation.
Yeah, and speaking of that, they keep saying, that's part of the definition, is part of how they manufactured this week's CPI numbers, I think, is what came about it. So they can make that whatever they wanted it to be, because just like they say, right, they've adjusted that definition how many times back to
Right.
71. We'll put this in and take this out. I just realized, or I noticed when we were doing our recent shopping, and everyone sees inflation differently, right? Whether it's a gallon of gas, I've talked about a gallon of milk. Well, I was noticing Diet Coke or Diet Pepsi, whatever. I'm not a sponsor for anything. Whatever your soda beverages of choice.
Yeah.
Over $5 for a 12 pack, and it was on sale. I have never seen a 12 pack of pop be $5 on sale. And a case 24 pack was $9.
What was it normally?
Like $3.
Oh, it's almost doubled then.
Yeah. Like on sale, you can get 3 for $9, 4 for $12. They do that, 3 for $10 was like the sales. Now the sale is $5 for one.
Wow.
I was like, oh yeah, that's inflation right there.
Wow.
As much Diet Coke as I used to drink, I should invest more in Coke.
And I remember that I was listening to the CEO of Hershey's, who said that it wasn't necessarily the cost of the cocoa and the sugar and everything else that they need in order to make the chocolate bars. It was, in fact, the cost of shipping them.
Sure.
So
I could see it.
Yeah.
And now it's the cost of the shipping containers that are floating out in the ocean that have nowhere to dock.
Yeah. I heard about that off the coast of LA. And there's just a gigantic number of boats sitting out there with empty containers.
It's just a traffic jam.
Yeah.
Well, we're close to the top of the hour, gentlemen and ladies. Appreciate your fine attendance once again. I almost was going to miss this one, but we made it. I was going to be out of town, but we're going out of town Saturday, so glad to still be here. But we'll be back on Tuesday, as usual, Tuesdays and Thursdays with you guys. Any questions, you can always email us at support@tradingology.com. And, one little quick note, Dave and I were just working too. We're going to have a little bit more activity going on the Facebook group if you guys are Facebook users. So look for Tradingology on Facebook, and we'll be getting some more interaction cooking there.
Yeah, that would be fun.
Looking forward to that.
Awesome.
All right, Dave, any final words or any thoughts, or we can just wrap her up?
No, I just don't. I just think that this is not going to end well. But you know what? I have no idea what's going to happen, as nobody really can tell the future. However, you got to think that at some point inflation is really, I think the only thing I'm really sure of is that we are going to get massive inflation, kind of 70s style inflation, where interest rates all of a sudden they go to, when they hit 5% on the 30, they could go to 7, they could go to 8. We've been in a low inflationary environment for so long that people don't remember what interest rate. I mean, interest at 4% or 5%.
Right.
But go ahead.
I was just going to say, this whole new, Gen Z is used to 0% and instant gratification for everything, and there's no cost for financing. You can buy your card 0%. Those days can only last so long.
That's right. And remember, before any large move, typically this happens in stocks and Forex and cryptocurrencies, it doesn't matter what it is, there's a shakeout. And so that's why I think interest rates are probably going to shake out. They're going to drop real quick, maybe even to the zero bound on the 30-year. And if that happens, that's your signal, hey, the inflation's coming. And so there's going to be a shakeout, just like there is in any market, before it goes higher. And so before we see that big inflation, what I'm looking for is that shakeout in interest rates. And then we're going to get the massive upward move.
Yep, Bob's got it right on. You can't print money forever without consequences. They're just trying to prolong it, but yeah, you have to pay the piper sooner or later.
Yep. Absolutely, guys. All right. Well, thanks everybody. Have a great weekend, and we will see you on Tuesday.
Take care, everyone. Have a great weekend.
Take care, Dan.